Yo, what's up guys, welcome back to another weekly market update where we are going to take a look at the market from both a technical and a fundamental perspective, especially the stock markets that has been a bloodbath. But before we continue, let's go straight into the information. Firstly, last week stock markets were plummeting, and we obviously saw that because there is so much happening currently in the market, and I'm going to open your eyes to understand why stocks are falling and why it could potentially see that continuation happening. It's a reimagine of in terms of what we saw happening throughout COVID. First article coming from Financial Juice is saying stocks rally stalled came to an end with S&P falling 10% from its July peak, entering a correction phase. Now, they're saying that the S&P 500 is now at a level where we can expect a correction here as well. And obviously, if we do look left over here, we can see that the market is trading at support. It says here, the news that the Israeli forces are escalating their operations in Gaza reignited volatility. The benchmark stock index was on track for its worst week in month. JP Morgan Chase fell as Chief Executive Officer Jamie Dimon plans to sell shares worth around 141 million. Also, earnings boosted Amazon and Intel. Treasury 2-year rates fell as markets adjusted to higher inflation data. The value of the dollar decreased. US stocks are down for the third month in a row as bond yields increases on concerns about consistently hawkish Federal Reserve. Now, like I always say, that if you see the bond yields increase, especially the 10-year, then there's a high possibility that the Feds are going to hike interest rates, because this bond yield indicator is used by investors to track in the for long term whether the Feds are going to hike the interest rates or not there as well. Now, without any further ado, guys, you can go through the entire article, but this is to give you an overview of what's currently happening in the market. But that's not where it stops. Next week, we are kicking off the month with the first but not the least. We have the US consumer confidence. Now, basically, the Confidence Board Consumer Confidence Index is an economic indicator that measures the level of confidence and optimism amongst American consumers about their personal financial situations and broader economy. It is based on a survey and assesses consumer views on employment, income, inflation, and future economic prospects. The Wednesday, we've got the US ADP. The ADP employment change figure provides insight into the health of the job market, particularly in the private sector, before the release of the official US non-farm payrolls. Then we've got the S&P manufacturing PMI, and basically is the US S&P, the manufacturing purchasing managers index, is an economical indicator that measures the performance of the manufacturing sector in the United States. And the US ISM purchasing managers index is an indicator that measures performance of the manufacturing sector in the United States. And we can go through this entire list. The reason why I've added this is basically so that you guys can have a little bit of a better idea in terms of what the overall data means. You can go to the website, you can go through them. We also have the NFP that's coming through. The US unemployment rate is another monthly economical indicator. We've got NFP coming through there on Friday there as well. Guys, without any further ado, let's just go through the information that we have over here. Now, we're going to start with the dollar index. Again, my bias on the index is bullish. As I've anticipated before, I did expect the market to pull back. The market has not given me the pullback that I have expected in that market, and with a lot of high impact news coming through this week, I would like to see this market pull back first before seeing that continuation to the upside. The NASDAQ 100 over here is gonna fall flat further into this level that we have seen the market printed over here. This level over here acted as a level of resistance. The market broke above that, and after almost an entire 6 months, the market's now once again back to come and test that level. We are trading in deep bearish territory over here. We can look left. You can see how the market broke below this very important structure. I do not know why this mouse never wants to click what I do. We had a break below support, and once support gets broken, it becomes resistance. we had the breaker structure, we had the pullback. We obviously expect that continuation in the market there as well. Now the US30 over here, let's go look left over here. We don't have any structure that the market has highlighted, but what we do have is a clear break below this very important structure. And again, we have a clear impulse. After an impulse, we expect a correction. And if you take that Fibonacci from the high to the low, we do have a 0.382 pullback lining up perfectly with that structure that I do expect the market to pull back. Now gold is very interesting. If you do remember, I did say we are quite bullish on gold, and once again gold has hit the $2,000 mark. Gold has finally broke above the structure that I have been patiently waiting for the market to break. Next stop for gold is going to be here, but obviously we had a clear breaker structure. I just need to wait for a pullback, and then from there I'll give you guys another update on the market there as well. S&P 500, as I've said before, is currently trading at what's known as a U-turn territory, where the market is trading close to very high probability or possibility U-turns structured in the market. So I do expect this pullback as well. Guys, that is it from my side. But before we go, I just want to go through some of the questions that we have received here. Hi, it's Mr. Hussein. He's saying sniper as to next week's market breakdown. Yeah, guys, please make sure you check out the sniper entry strategy, as it does help a lot of new traders get into the market as well. Gia Lancer is saying, had to like the video twice. Crazy how everything boils down to support and resistance. No matter what trader you turn to, they just make up other names. That is what I've always said about trading. The market only creates two levels, and that is support and resistance. The reason why people fall for a lot of people is because they give these names different words, but they serve the same purpose. There's only support and resistance in the market. Now they can overclink gaan haal and they can over you can go fetch whoever you want to. I will argue until I cannot argue anymore. The market only prints a high and a low, resistance and support, not this block, that block, Mario block. No, it is just support, and that's it. Bounces off those levels, supply and demand, support and resistance, high, low, I don't care what you call it. It's price action at the end of the day. Rochelle Labazi is saying, this man's feeding my family. Mary Johannes is saying, I learn more from this channel than 1,000 Rand US30 strategy I bought. Keep dropping them gems. Cheers to the 10k subscribers. Thank you. As Jay, a student van Transparent FX, Jay klink net soos hy of Jay seker baie by hom geleer. Het jy die COT reports neef? Yes, I've actually did this course many years ago when it was still very expensive. I did do it with Nick. So yeah, the COT reports, I've done a video on that, but there's also a link in that video of a guy that creates the COT reports for yourself. Jacobus Hartnick, thanks a lot. Enjoy your work. Cheers for ears. Thank you for the video gift. Zamilai saying the GOAT once again. Mr. R, the real GOAT. When that is it, guys. Please enjoy the rest of your weekend. Tomorrow dropping another breakdown, and yeah, best of luck to the Springboks once again. We are excited to see what's going to happen, and then we got El Clasico as well. That is it from my side, guys. Thank you for your time, and as always, 10k subs, drop the strategy. Thank you for your time, and as always, cheers for years.